China is dumping U.S. debt at an alarming rate. Central banks around the world are selling U.S. government bonds at the fastest pace on record. Foreign official net sales of U.S. debt hit $123 billion in the last 12 months ending in July. This decline is the most on record since the data started in 1978. Looking back at the previous year, foreign central banks had a net increase of $27 billion. After China, the second largest U.S. debt dumper is Obama's good friend Mr. Putin. Russia's holdings fell by $32.8 billion in the last year. In August, the U.S. Treasury officially had a trailing 12-month decrease in foreign holdings, the first time this number has gone negative in 15 years. However, 15 years ago, the U.S. actually had a budget surplus. Looking back at the only other periods where the U.S. Treasury had a negative 12-month period for foreign holdings, while deficits rose, takes us back to 1979 and 1974. Interestingly, what followed those years in the gold price was nothing less than shock and awe, with the gold price rallying 92% and 127% in those following years. August of 2015 marks only the third time this set of circumstances has happened. Since gold's September low on 9/11, gold has risen 10%. The mining shares, which can be a leading indicator and will rise more than the physical metal, are also showing significant breakouts in the past 30 days. The GDX, which tracks the larger gold companies, is up 28%. The GDXJ, which tracks the junior mining shares, is up 30%. All this is setting up for the perfect storm for a violent gold rally. As TF Metals reported in August, gold CONMEX inventory is 92.4% below normal, with a record 253 ounces of paper gold to 1 ounce of actual deliverable physical metal. All this is happening at a time when the mining stocks are at their lowest valuations in 4 decades. The supply lines are literally drying up, with no major discoveries being made in the past 10 years. Petropavlovsk, a leading Russian miner once valued at $3 billion, is now essentially worthless. BHP Billiton, the world's largest publicly traded mining stock, plans to cut $4 billion next year. Rio Tinto, the second largest, is cutting $1 billion. Canadian mining companies are turning to egg sales, marijuana, and even hair care products. The TSX Venture Exchange, home to the small exploration stocks, is down 85% in nominal terms and 90% in real terms. Even US Global Investors, a Texas-based investment firm that specializes in resource stocks, just launched over the summer an airline ETF. On September 1st, Russian President Vladimir Putin drafted a bill that aims to eliminate the dollar from trade between former Soviet Union countries. Last year, Russia began to unload massive amounts of US debt, with a 20% reduction in December of 2014 alone. Now is the time to own gold and gold shares. The move into the GLD has also been climbing higher since August, with a legendary investor, Stanley Druckenmiller, taking a $323 million position, which is 20% of his portfolio and double the size of his second largest holding. Gold right now is also in its annual seasonal cycle, where the price, looking back 5, 15, and 30 years, has a pattern to rise higher, according to the Moore Research Center and US Global Investors. It's still early to call the new bull market for gold. However, it appears that there is significant evidence that the summer of 2015 will mark exactly that, the start of the new bull market, with new trends breaking out all around us. For one, gold is no longer falling against the dollar. Economic news is now moving gold, having some of its largest updates on the jobs numbers and housing data. Gold is already in a bull market in other major currencies, the Russian ruble, Brazilian real, euro, and the Japanese yen. The opportunity in this sector as both a safe haven and a vehicle to rapidly grow your wealth is now. Visit futuremoneytrends.com/gold to learn more about how you can best position yourself to profit from the new bull market in gold. One that as a backdrop will include a global financial crisis that is specific to government debt and their worthless fiat currencies. Subscribe free to futuremoneytrends.com by visiting futuremoneytrends.com/gold and also receive a tiny gold stock suggestion that is being accumulated right now by some of the most legendary investors on the planet. FutureMoneyTrends.com is giving it to everyone who has watched this video, free, no strings attached. Just visit FutureMoneyTrends.com/gold and receive this investment idea today.